And welcome to another episode of the Bitcoin News Show. I am your host, Vortex, and you guys are right here on the World Crypto Network. We are truly going global over here on the World Crypto Network with Mad Bitcoins and Thomas Tonveys all the way over there in Europe. It's absolutely been great. We have a great show for you guys today. We're going to be talking about a lot of good stuff. We're going to be talking about the Chinese exchanges closing, of course, Core 0.15 being released, and maybe we'll even get to some crypto APIs by the big companies of Apple and Google. So should have a lot to talk about today. Let me introduce our guests. We have Mr. Francis, the co-founder and head of research at Crypto Assets. Francis, how you doing?
Hey, Vortex, how's it going?
There we go. And yeah, I can never pronounce that, Francis. Catalaxy?
Catalaxy, yeah.
Catalaxy, there we go.
Catalaxy, yeah. So
head of research at Catalaxy.
Exactly, that's it.
Awesome. All right, thanks for joining us, man. Then we got, of course, returning one of my favorite freaking guests we've ever had here, Mr. Gabriel. We got the #1 tinfoil hat person ever. That's the word I was looking for. My fellow tinfoil hat, Gabriel D. Vine from Future Rant. Gabriel, how you doing?
I'm doing great. Really excited for today's show, except for John. And I think it's just going to be totally awesome. Oh, no, I'm just kidding. I want to know about Catalaxy when we get started. Anyways, thanks for having me.
You bet. Yeah, we're going to ask up here, and friend, we're going to ask everybody some questions, so it should be a good time. Then returning again, we got John, CEO of XO Media. He is Bitcoin Error Log on Twitter. John, how you doing?
What's up, guys? I'm doing pretty good.
Awesome. I'm really glad to have you back. Last time we had you on, we was the Vinny episode, and so I guess we had to give him a little bit of the business, but he took it fine. Everything was great, so I had a great time. So thanks so much again for joining us then and joining us now. Awesome, John. All right, and our special guest tonight, ladies and gentlemen, we got Mr. Pierre Richard. How are you doing, Pierre? Your articles on the Nakamoto Institute have been absolutely amazing and fascinating and have changed my life, I know, in a big way. A lot of the stuff still holding true, written all the way back in 2013. Pierre, how you doing, man?
Doing great, Vortex. Thanks for having me on, and thanks for all the compliments.
Absolutely, man. I can't believe it's taken me this long to have you on, Pierre. I mean, I've been following you on Twitter forever. I mean, I'm always retweeting you, so really, really glad to have you on the show, and I think you're going to have a pretty interesting take on all these topics today. You've been in Bitcoin a long time, so I think it's gonna be a fun show, guys. All right, so we got over 200 people, almost 300 people joining us live right now. So let's get the show started. We got people in chat rooms going. Really excited to get going. So here we go. First topic today is going to be, of course, the big topic, all the FUD going around, the Chinese exchanges being closed. We've seen Huobi and OKCoin and ViaBTC and a bunch of these shutting down. And now we're seeing the volume in China decrease down to less than 15% or so. I want to ask you, Pierre, first, what does this mean for Bitcoin in general? What's happening with these Chinese exchanges? What's going on? And then is the volume just going to move somewhere else anyway? And does Bitcoin really even care?
Yeah, so my understanding is that all the ICO speculation going on attracted a lot of attention to cryptocurrencies, crypto markets in general. And as the regulators in China were trying to figure out what's going on, they realized that there's a huge amount of speculation going on in their country. And they're apparently, from what I understand, it was already illegal to begin with. And so they've just been flying under the radar until now. And now I've heard conflicting reports, but from what I understand, they're going to shut down the exchanges until they are regulated or, enter into some sort of agreement with the government. I think it proves the necessity for Bitcoin in China. I think it proves that their country, their government more specifically, is totalitarian in the sense that there was no deliberation, transparency, consultation, or any sort of voting that we would expect in a government. So bad in terms of liquidity. More liquidity is always better, and they shut down a huge source of liquidity. But at the end of the day, Bitcoin is still legal in every other country in the world, and trading Bitcoins for fiat continues to be a massive booming industry.
Yeah, and that's what I'm kind of seeing as well, is that it seems to be just a regulatory issue, and so far Bitcoin doesn't seem to be carrying. I think we're over 3,700 again right now. Let's see what Francis thinks. Francis, what do you think about these exchanges closing? What's going on over there? And is this really going to be is this the end for Bitcoin in China?
Right. So I've had a confirmation from a really high level source. I think the same source as a bunch of other people, that it wasn't necessarily related to the ICOs. So everything that Pierre said is correct, except from the ICOs may have attracted more attention, but it's definitely a Bitcoin exchange ban. So I want to talk. There's a lot of ways to tackle the issue. I'm going to talk about some of the things I've been hearing on Twitter and some of the more unseen effects of what this can happen. My favorite economist is Bastia. I think Pierre there is gonna, probably smile there. Yeah, there you go. So let's talk about the unseen effects as Bastia would have done and try to foresee them. So a lot of people are talking about how this is going to affect miners and maybe help decentralization because the miners might move elsewhere, or this is going to somehow hurt Bitmain and this is going to make other companies better. So this is somehow a good thing. Well, there's a theoretical approach and there's what's actually going on, and I'm going to talk about the theoretical approach. So obviously, the first rebuttal is, well, the market is going to go OTC. So let's talk a little bit about how that's going to happen. I know how that works because my company bills about 70% of our clients are miners that pay their electricity bill with Bitcoin directly. So it's really not difficult for what's going to happen is the miners are going to find a way to sell their Bitcoins for cash or for some other covert method. And it's not going to be too difficult. They're going to do it either legally or illegally, with or without bribes. But they're going to find a way to get those electricity contracts bills paid. And what that's going to do is that, and the way the way they're going to pay it is that they're going to have people in China that are looking to put like $25 million US worth of money overseas, and they're going to go to the miners and say, hey, you know what? Like, I'm going to get some cash together, and as long as the Bitcoins keep coming in, I'll just continue to buy them OTC at your price, and then I'll be able to move my money out of the country, which is what I want to do. So what's going to happen is that you're going to have these miners, which are going to be the only source of liquidity or the main source of liquidity in China, and they're going to have a really rising demand for those Bitcoins. So you're going to have people that are going to be competing to buy OTC, the Bitcoins from the Chinese miners, in order to do, move the money out of the country. So you can expect to have the Chinese miners buying at a 10% premium if they are able to get the cash and pay their electricity bill. So what this is going to do is that the big companies like I'm not going to name them, but the big companies are going to be essentially having this barrier to entry to dumping the Bitcoins for cash. And it's not going to be easy to do because you're going to have to be connected. So I expect that they're going to be kind of acting as brokers for the other small miners. And it's going to converge around like one big or two big entity that have this really easy way to dump a lot of Bitcoins and pay electricity bills. So another way to look at it is that this could actually cause centralization of mining. As we know from the mining panel at Brick and Bitcoin, there are a lot of small miners in China that, yes, are buying Bitmain equipment, and yes, they're mining on Npool, but they could actually, go off. So they're already, with Bitmain. Bitmain is going to become their banker, essentially. But the other practical aspect to it, and something that I've been witnessing, is that I work very closely in the mining industry in Canada. I'm trying to get a lot of mining done here. And there are miners who are leaving China. They're not necessarily saying why, but this is a movement I've seen for the last 2 years. People visiting the Bitcoin embassy, asking around about electricity rates in Canada and setting up factories here. And people are moving, like they're moving millions and millions and tens of millions of miners to Canada. So whether or not the two are related, I don't know. From a theoretical standpoint, I think this is probably going to lead to more centralization of mining, and it's probably not a good thing, and we should not celebrate that. But what I'm observing is that there is more decentralization, and people are starting to flee China because the rates are not, the rates aren't all the part of the equation.
You think that there's going to be, you think this is going to be cause more centralization in the short term? Yeah,
and in the short term, and perhaps an argument could be made that if it gets so centralized, then they'll become uncompetitive. So the other, on the longer term, maybe I don't know, but I don't know about the longer term. But yeah, for the near future, this would lead to more centralization at the moment.
So I thought that maybe it would lead to a little bit less centralization because now people are going to be spreading out outside of China, because we kind of have a bit of centralization right now in China. So if miners started leaving China, going to all around the world, would that not lead to more decentralization?
Sure, but imagine like one huge entity which has a deal with the government to sell their XRC rates and causing super high price and getting those continued subsidies. Like, you know, Bitcoin's an open market, and if you have one huge bank / exchange / electricity company, yeah, they can outcompete us. You know, so.
Yeah, very interesting. And
we shouldn't forget that a big part of the centralization of Chinese mining has to do with that the miners are made there, not just that Bitcoins are mined there.
Yeah.
Okay. Yeah, that's good point as well. And also, what's interesting too, Francis, you said that miners are now going to become like the new OTC exchanges in China, because if they do shut down the exchanges, and I don't think we think they're going to shut them down forever. I just think that we just think that they need regulations with the regular licenses. But until then, until those exchanges come back, it looks like miners are going to have to provide the facilitation of OTC trades for the most part. Is that what you're saying, Francis?
Yeah, of course. And like if you look at the way that the Chinese companies actually work, like they've already integrated all those verticals together into huge conglomerates. So you'll have they already there's for example, look at Bitbank, right? You look at Bitbank, they have there's a guy there, Virgilio. He's a really smart guy, and their business model, they have the exchanges, they have the brokerage, they have the manufacturing, they have the hosting, they have like ICOs to raise money for more, like it's a whole banking ecosystem that they have. So yeah, obviously I think they're gonna be doing, we're gonna see a huge, large Chinese conglomerate that's gonna look like a bunch of companies probably, but it's gonna be like PepsiCo, you know, it's gonna be one guy or one.
And I think we're kind of seeing that emerge already, right, with Bitmain.
Yeah, a lot of spin-offs, and it's going to look decentralized, but at the end, the money men at the top are going to be a few group of people.
And of course, this is what we kind of expected with an authoritarian regime that they have. I mean, that's pretty much what we expected because of the amount of collusion that will happen in that type of regime. So let's go to John next. John, what do you think about the conversation so far? You know, what do you think is going to happen with the exchanges, and what do you think is really happening right now? Like, maybe give us your take.
Well, from my perspective, I've been kind of tied into the trading community side of Bitcoin for a few years now. And when it comes to China and the trading community, we're always very quick to put on our tinfoil hats. And I think that in this case, there's probably reason to, just like every other time. And I think it would be, I don't feel right just diagnosing this as they saw a problem and these guys weren't doing something under the proper laws and they're fixing it. I think there's probably a much more deliberate plan related to this. I think that's evidenced and supported by this document that we see circulating about how they also intend to now block people from being able to access various, you know, major Bitcoin websites and even some Bitcoin seed nodes that are hard baked into Core. So I think that they have a plan and they see that they have to do other things to be able to enact that plan. And I think that seeing them do something like block these websites means that we'll probably see these exchanges come back. We're probably going to see a higher level of control, maybe a more subliminal level of control, or for lack of a better word, of what China is doing with Bitcoin. I don't think these exchanges are going away forever. And I also think it's possible that, you know, just to fully put on the tinfoil, that this is just manipulation, a way to curb the value as they have concerns about capital flight. You know, there's all the common, you know, conspiracy theories that come with China, but, you know, in the end, they happen for a reason. You know, China was heavily washing trade volume for a very long time. You know, they have a lot of power to be able to manipulate people's Bitcoin holdings and traders' Bitcoin positions and the price through their futures market, which is a very, you know, very large factor in the market, and all traders really care about that. And so they have a lot of power. I like to see that there's some, you know, some of this getting burned to the ashes here to see what comes up next. But, you know, in the end, I think we're going to continue to see them play a tricky role, and I don't think it's ever as simple as it seems.
Yeah, and, you know, Simon Dixon likes to say that really we're in the accumulation phase right now, right? We've already passed the phases of, like, you know, being scared, too scared to go in, and too scared of regulators or anything like that. I think we're now, I think I have to agree with Simon, where I think we're now in the accumulation phase. And this is where governments and corporations issue FUD so that they can buy up the Bitcoins as low as possible, right? As low as absolutely possible. So that does kind of make a little bit of sense, especially since, you know, if this continues to go the way it is, I mean, we're going to have 5-digit Bitcoin by the end of the year.
I'm a little bit skeptical that countries are going to be quick to realize that the smartest thing they can do is buy Bitcoins. You know, that really is the only thing they need to do to be able to make sure they have whatever power they need in the Bitcoin world. Everything else is just delaying that. So, in my opinion, but I think they're going to be very slow to learn that. So I'm skeptical that China is actually trying to accumulate Bitcoins. They're probably still trying to keep the price down or trying to mitigate its power because they want to do a China coin or some other thing. But yeah, once we reach the point where they realize they have to buy Bitcoins, then the price will just go up that much more. So,
and let me ask you this, John, do you think that they can just get around these type of things, the Chinese Great Firewall? Can they just get around that with a VPN? And the miners?
I don't know how difficult it is. I mean, in my opinion, when it comes to things digital, you know, in the internet, if you can find a way. And now we have the Bitcoin satellite and things like that to help people be able to get out of there. But, you know, it's not just about whether they can. You know, people might just be spooked enough not to do it, because you still will get in trouble if they catch you.
Right. Very interesting. Okay, cool. So let's go with Gabriel and see what he has to think. I know the tinfoil hat was already mentioned and thrown out there by John, Gabriel. So why don't you let us?
Sorry, man.
Oh no, that's good.
Let's see what you got, Gabriel. Go ahead and give us your take and thoughts on these Chinese exchanges getting shut down and overall what's going on.
Yeah, you know, I've heard a lot of really interesting things already so far, and you guys have really kind of been exploding my brain here for the last few minutes. So thank you for that. Just a few points I want to kind of emphasize and touch off on. First of all, yeah, I mean, obviously holding Bitcoin is the way to, you know, gain influence in the Bitcoin ecosystem to an extent. I mean, if you're an owner of it, that gives you some power, of course. And as Pierre in his writings, along with Daniel Krawisz, have pointed out numerous times, the way to protect yourself against a fiat takeover by crypto money is to hold Bitcoin as you know, as a protection in order to protect your fiat currency, just like they do with gold. And I wonder, I think maybe they have figured it out, but are just like, I don't know. I think it's weird because it seems so obvious to me, but John makes a good point. Like, the price would probably be quite a bit higher if they were actually accumulating a lot, because it would have so much buying pressure. But we really don't know. You know, I think we're kind of now in that gray zone where they're figuring it out and they're scared shitless. And this Chinese crackdown is kind of like is a very complex issue with many sides to it, as have already been pointed out. You know, we're in the middle of a transition away from the US dollar as a world reserve currency. And there's many overt signs of that, such as just recently Venezuela, you know, selling their, you know, setting up the yuan-backed and gold-backed Chinese, you know, trading scheme for their oil, and that's happening ever more. They've got their, you know, SWIFT fiat, you know, digital transfer system already set up in lots of countries, participating with them in that. So there's that process that's already going on in the background, and so I think that possibly they have very mixed attitudes toward Bitcoin, because yes, it's something that can help in the fight against the domination of the US dollar over the world economy. On the other hand, it doesn't do China any direct favors other than that. So I think that they're kind of like fighting themselves a little bit. But I think from what I can tell, China seems very well disposed toward Bitcoin, and they think that they can maybe kind of help it along while giving lip service to those fighting Bitcoin by doing this type of regulation, which is not directly harmful in the short term. What I mean by that is, okay, long term, yeah, obviously regulation and laws are bad for freedom, they're bad for individuals in every case. However, in the short term, we could see actions like this, like for example, the ICO market obviously overheating, the Bitcoin price going through the roof very steeply. It's conceivable that they want to actually nurture it along a little bit and kind of wanted to help cool off the market a little bit temporarily to help make the uptrend a little bit more shallow and consistent rather than these jagged peaks and valleys. So it's conceivable that that is kind of among their goals, but it's very hard to tell, as you guys have pointed out. And this is just kind of an example of second order effects. We all have to look at these type of effects when you're talking about political machinations, when you're talking about the political process, laws and regulations. Many people, including politicians, often overlook, higher order effects, and these type of situations definitely engender that type of analysis for sure, because there's so many different effects on an action like this. And regarding the centralization versus decentralization argument, people have made the very valid point repeatedly over the last couple of years of, what is decentralization? What is centralization? How do we define them? Are they contextual? And there's a concept that comes out of systems theory, I believe, mid-20th century systems theory, called holacracy. And what this is an idea of fractal hierarchies. In other words, imagine like a pyramid or a triangle is a hierarchy. Well, you could conceive of that pyramid as forming a smaller pyramid and a larger pyramid, right? You might have hierarchies upon hierarchies upon hierarchies. And then you could also have networks thrown in there too. So you could have a network inside of a hierarchy where inside that network things are kind of equal, but then there are levels above it. Or you might have the opposite, where you'd have many hierarchies that relate to each other in a more equal fashion, where there's kind of a network of hierarchies. And this is this concept of holacracy, where it's sort of related to the term hologram, right? Where there's there's microcosms of the whole. And I think that that's kind of the way we need to look at the Bitcoin ecosystem, where there are these limited hierarchies, but then when you look at it from a little bit larger context, there's plenty of room for a lot of other people to get in, because you can't coerce somebody's private key. There's this cryptographic backstop that is very different from a coercive violence backstop that we're used to in world politics and in commerce too, in a system where where politics and government utilizing violence is the backstop. That's the thing that you can't stop. It's like, okay, at that point, whoa, we're at war and you've got a gun to your head, and there's no place to appeal that. Whereas in cryptography, that point is, whoa, it would take us 11 billion years in order to brute force this password. So this is a wall we can't go past. And that engenders very different structures. And I think holacracy is a good thing everyone can check out, HOLOCRACY. Lastly, I wanted to bring up a contentious point that led to Pierre blocking me on Twitter 3 years ago. And I was definitely being very annoying and deserved it. But I would love to hear his, and I was being very genuine, and I really wanted to hear his thoughts. I was not trolling. And so I'm going to say it again. I'd love to hear everybody's thoughts on this, but especially Pierre's, because of his understanding of finance, markets, accounting. Traditional markets are extremely fraudulent in this day and age, because digital assets that are not, crypto money and digital fiat are both creatable out of thin air. You can't say, oh, deliver me my stock certificates like you could 100 years ago. Now it's all held centrally by the DTCC. So there's fractional reserve fiat and fractional reserve stocks and other whatever securities that are all completely manipulatable and fraudulent. That's one of the reasons why we're seeing real price action on Bitcoin exchanges, because half of the exchange is genuinely scarce digital assets. However, half of the exchange on Bitcoin exchanges is fiat that can be created out of thin air and can be used to manipulate. So what I was annoying Pierre about was, can governments, central banks, whoever's creating, banks in general, creating fiat out of thin air, can they use that fiat to create shorts and other financial derivatives in order to manipulate the price? And his basic point was, dude, that would just enrich traders. It would never work over the long term. And I definitely agree with that, but I'd love to hear any more thoughts that you have on that.
Yeah, so it just seems to me that if you have an infinite amount of fiat, all you can do is pump the price up and then dump it. So granted, that can have psychological effects on traders and cause things to take longer than they should in terms of the steady price appreciation. Because if you reinforce the argument of Bitcoin's too volatile, it'll never be a money, et cetera, if you artificially reinforce that argument, I could see that would inhibit Bitcoin's growth. But I just, as you said, like over the long term, that just enriches traders. And I think that people come around to Bitcoin, to hodling, regardless of the volatility. And in fact, you could also make the argument that volatility attracts people. And I'd say every wave, every Bitcoin bubble has been both the reflection of new people coming in and momentum trading and momentum individuals coming in and being fair weather friends to Bitcoin. Plenty of them sticking around. And I think it's the ones that stick around that build the Bitcoin economy and build the future.
Awesome comments, Pierre. I have to agree with you that wholeheartedly. I mean, hodlers are what make what part of what gives Bitcoin its value, is the fact that we believe that Bitcoin's value will remain valuable, so we hold it, and not only remain valuable, but actually go up in value, be a deflationary asset. So even better. Francis had a comment on this as well. Francis, go ahead.
Yeah, I had a couple of thoughts on what Gabriel and Pierre just said. So the first thing is, I think we all are very interested in kind of understanding when the governments are going to start to hodl Bitcoin, because that will be the tipping point for hyper Bitcoinization, and that's we're going to be able to tell everyone, haha, I told you so. So we kind of all want to kind of foresee that. But before the governments, let's think about another institution that may do that, which are the banks, right? So I've been consulting with banks for many years, and a lot of them don't get it, and they want to do their Hyperledger-based digital fiat settlement system. But some of them are starting to understand. Anecdotes that I have are very big executives of banks showing up to meetups with, Shapeshift T-shirts, and guys that are, when you talk to them, they are aware of the ETC ETH split, and they are firmly on the side of ETC, and these are top level bankers, right? So these people exist, and they understand that the true disruption of Bitcoin is really their business model of lending and fractional reserve. That's really the core business model of the banks. Payments just kind of, fees just kind of pay the bills, I guess. So that's not where the power is derived from, taking fees. It's creating and loaning money. So in that respect, one thing that they're going to start to do is they're going to start to act as depositories of Bitcoin, as custodians of Bitcoin for individuals for multiple reasons. The best reason, and this is a good thing, because this allows us to put some Bitcoins on the books and get them audited by professional firms, which is my plan to do out of Canada with Grant Thornton. And then you can get loans for fiat with those Bitcoins as collateral. So you don't have to sell Bitcoins for business opportunity. You can prove that you have a lot of crypto and get just a traditional loan like you would normally if you think it's a really good deal. So that's the first thing. But then they're going to realize that's a huge power. So they're going to need Bitcoin to be able to do a lot of things, like true business models of banks are going to be like providing liquidity to Lightning networks, providing liquidity to like smart contracts like Prism, where you can like trustlessly exchange crypto to another that requires liquidity, but it's decentralized. You're gonna have to lock up some Bitcoins in two-way pegs to do your bank sidechains and that kind of stuff. So they're gonna need Bitcoins to do a lot of stuff, right? So one might think they're gonna like buy them up, scoop them up now so that they can use them in the future, but they're not interested in the volatility risk. So one of the things you need to think about is that instead of buying Bitcoin, they just need to have the private keys. They just need to be in control of they don't need to actually own the Bitcoins, right? So you can imagine that hodlers will deposit, and this is what they're going to use to, to be able to perform those lending-based business models or liquidity business models in the future. Yeah, so that was my first thought on that, and I had another thought, but I forgot. So that's good enough for now.
I'm sure you'll think about it, Francis. But yeah, I mean, it seems to me like in a Bitcoin economy, to be able to do anything of value, you're going to need some Bitcoin, and that means for anything, like even including doing things like purchasing a house, perhaps you might need to own just a little bit of Bitcoin to be able to, for example, prove that you own that house cryptographically, hold the private key to that house.
Yeah, and that's going to be super interesting to the banks because this is immediately liquid, seizable assets, and of course, you say you can't force me to give my private key. Well, I can say the same thing. You can't force me out of my house, but yeah, I can, because I'm going to send someone to your house with a few guns and force you out. So the banks will love that. They'll love to have Bitcoins as collateral for sure.
Interesting indeed. And all right, so does anybody else have anything else to say on this topic before we move on?
Yeah, I just wanted to add, John had mentioned capital controls and with relations to China. And I think that do you guys know Kyle Bass? He's a big hedge fund guy out of Dallas, and he recently turned bullish publicly on Bitcoin. His major thesis over the past few years has been that there is the largest credit bubble ever conceived happening in China currently, and that it's all being held up by these these bureaucrats who are finely tuning the system so that if you think of it like a triangle of economic growth, credit growth, and monetary growth, they're all trying to balance these three different aspects, because if one of those things gets out of whack, the whole the whole thing falls apart. So with regards to Bitcoin, I think that they see this has the potential of impacting one of those aspects of their finely tuned system. And if they start having fiat leaking out of the system and into Bitcoin, and it happens in an uncontrolled manner where they don't have the transparency into the process, I think that they would be very concerned the impact that would have on their economic growth and on their social stability internally and their political stability. So when we think about, well, why are they regulating? It's not to catch drug dealers. It's not Silk Road concerns. It's to get the information about who is buying Bitcoin, who is selling Bitcoin, where do they live, what do they do, where does their money come from? Because if there were to be a disruption in the financial system, they want to be able to know who's got the private keys. And they want to know also who's operating the exchanges so that they can go in and try to manipulate things and send people letters. So that's what I wanted to add on that.
Absolutely. I mean, that's what authoritarian regimes do, right? Authoritarian regimes do. This is what they do. They want to make sure they have as much information as possible. Now, I mean, of course, there's some exceptions. Like obviously, the U.S. is the financial capital of the world, and it didn't always have this crazy amounts of regulation that it has now. But of course, we had the 1920s, and everybody trying to sell the 1920s version of an ICO, and things got out of control. So over the years, we've built up more and more regulation to accommodate all of these people trying to create new ways of creating securities. And here we are again with ICO. So, it's a whole new world, and it's really interesting, going to be really interesting to see how the governments like China and stuff handle this, because obviously if Bitcoin can be affected greatly by the government of any major country, then Bitcoin wasn't really then Bitcoin didn't really work, right? So right now we're seeing Bitcoin actually work. We've seen the China ban Bitcoin have two bans basically, right? Like right back to back, freaking ICOs and then the exchanges, the Bitcoin exchanges, and Bitcoin's still over 3,700. So far Bitcoin is, to me, proving to be what it wants to be, which is a censorship resistant store of value. So it's very interesting to see. Very cool. So thanks, guys, so much for your information. I think we can move on to the second topic of the day. We got about 700 live viewers here. The chat's going by. We're having great conversation. If everybody could just go ahead and give us a thumbs up on YouTube, let everybody know that you like the show. That helps us get into more people's feeds, helps spread the word of Bitcoin. And for all the new people here, please hit the subscribe button to the World Crypto Network. We have content like this all the time. We have a daily show, we have a weekly show, and my show is weekly. So we got all sorts of content, and plus we got a bunch more content coming up in the future. So go ahead and hit that subscribe button, guys. And let's move on to the second topic. So this is pretty exciting for people who love Core like myself, and for people who will pay attention to this kind of stuff. This is really interesting. Core now has released version 0.15 with a bunch of new improvements, including fee estimation, which is what I really want to see happen on the network. Really interesting stuff. Improved fee estimation, and the most important controversial ability, the ability to disconnect SegWit 2x nodes. So let me ask you, Pierre, first, is this really like the final coffin in the New York agreement? And because we're seeing people upgrade to 0.15 incredibly fast. Like the uptake on 1.5 has been the fastest in Bitcoin history. And so I just want to ask you, like, what do you think about 1.5? What's your favorite things? What do you think about it? And is this, like I said, is this the final nail in the New York agreement?
Yeah, so I was catching up on what's going into 0.15 using the excellent posts written by John at Chain Code Labs and John Newberry, that is. So that did get the most attention, right? The disconnecting S2X nodes. I think that it is sound engineering and sound network policy, and it actually is in the interest of SegWit 2x nodes to have this happen now rather than the day of the hard fork, when your node would get disconnected from all the connections, and it would kind of cause like a crisis on the network at an inopportune time. So I think that Jeff Garczyk's opposition to it was political rather than technical or based on the merits of the network policy change in 0.15. And I do think that the upgrading to 0.15 is political too. I know I immediately upgraded after checking the checksum. Folks out there, don't forget, you got to make sure that the checksum and the PGP keys match up with the binary and the developers. So, and don't get it from the same website. But that was my little PSA. I think that, yeah, the upgrading has been political. I do want to draw attention to the other changes that are in 0.15 because I don't want those to get lost in the mix because the core developers have been putting in a tremendous amount of work into making the Bitcoin Core node the best node out there. Now we have competing implementations. So there was the per output chain state DB upgrade. So this is in the weeds, I understand, but bottom line, better performance. We're looking at like 30 to 40% faster initial block download. Better fee estimation that you mentioned. This is just an astounding improvement over the previous fee estimation because there are plenty of use cases where you don't need a confirmation for days. You're just sending from, let's say you're sending it from your desktop to your mobile wallet, but you know that you don't need that money immediately. You just need it, within the foreseeable future. You can cut down your fee 10x, 100x by changing your fee estimation because now they have a target of up to 1,008 blocks, which is 1 week. So you don't even need to move it that far to see huge cost savings. And then I also wanted to add the replace by fee is now in the GUI. This also is a source of controversy. Replace by fee allows you to, if you attach a fee that is too low to a transaction and you want to speed it up, you can essentially double spend and send that same transaction again with a slightly higher fee to get that transaction through a little faster. That I don't know why it's controversial. If other people know why it's controversial, I'd be interested in hearing that. I think it's common sense. And then the multi-wallet support. Multi-wallet support right now is it's at its beginning stages. I think there's going to be a lot done on it, and it's going to dramatically improve the usability of the Bitcoin Core wallet in complex use cases. And I have an accounting background, so like that aspect of wallet management I find very interesting. And so I'm excited that we've got such great development work going into Bitcoin Core.
Absolutely. So glad you mentioned those things. I'm really glad. I was going to hope somebody listed a few of those out. So really glad, Pierre. Thanks for that, man. And yeah, just a lot of interesting, crazy, amazing technology here. I mean, people, this is just 1.5, you know, I mean, 0.15. I don't think people realize we haven't even hit version 1.0 in Bitcoin. This is how early days we are. I mean, this is like the late 80s for the internet. This is early days, and they are just improving and optimizing the protocol itself so much before we need to do things like heavy-handed things like just increase the block size without any research. Like the amount of estimations and everything. I mean, not to mention things that are coming down the pipe like Schnorr signatures that'll have further optimization. So just as this, what this all means is that Bitcoin is becoming global. Like Bitcoin is scaling. Okay, I love the hashtag Bitcoin is scaling because that's what's happening right now. You know, we're seeing blocks over 1 megabyte. We're seeing 1.5 come out now with these optimizations. We're seeing all this uptake, and it's clear that that SegWit is working so far. We're seeing uptake in SegWit as well. There's more than 2 or 3% of the transactions right now, and it's climbing every single day. More and more transactions in SegWit every single day. So hashtag Bitcoin is scaling, people. Let's go. Let's go next with John, then we'll go with Gabriel and then Francis last. So, John, what do you think about 1.5? What is your favorite things going on, and then what do you think about it disconnecting the BTC1 nodes?
Sure, just a few comments. One, as far as the replace by fee, if there's any controversy, I almost kind of feel like it should be the opposite. I always wondered why there wasn't an easy way to do it in the interface, and that's one of my frustrations. Probably my only frustration with Core is that the interface is always so far behind the features they're adding. And a lot of times the features they're putting in, you even have to, you know, I'm not a developer, but I have a developer that works on our project. And, you know, even with SegWit, we had to set up our own change address handling and stuff like that. So it's sometimes I would like to see things come out a little more baked for usage. But in the end, it's usable, you know? And so I'm glad that replace by fee is something that everybody will be able to use. It's going to look brand new to some people, probably. On the feature with the multiple wallets, it's not the kind of thing that you can do like multiple segregated wallets for all your users in an exchange. It's not that kind of scale. But again, like with a company like ours, we might be able to tie multiple applications to one node. And so there will be things that we can utilize with that. As far as the blocking of SegWit 2x, you know, I think we talked about SegWit 2x last time. I hope SegWit 2x is dead in the water. If it's not, it's a really disingenuous effort to go ahead and do it at this point. You know, when they first were announcing this, one of my questions for Barry was really, you know, you guys never demonstrated or showed any research as to why you needed to have the 2 megabytes in addition to SegWit. And, you know, these things are always ignored. It was always, you know, we're just trying to reach compromise. We're trying to make everybody happy. But, you know, I don't think compromise is compatible with consensus. So I don't have any problem with, you know, being hostile towards forks.
And of course, now, I mean, we have Bcash. So if they wanted their bigger blocks, then they got them, because we know Roger Ver is going out there pushing Bitcoin Cash like crazy in every single interview that he does. I mean, literally, like every single interview, he's creating an entire conference now around Bitcoin Cash. So hopefully we won't have to hear about him too much. But you know, but now of course what we're hearing from Barry. So Roger's gone. Now the new Roger is Barry.
Yeah, he just doesn't know it yet, you know.
Exactly.
I mean,
he seems to be.
but the thing is, it's so funny because you see all of the shilling that Barry Silbert does. He's still trying to keep this animated corpse of Ethereum Classic walking. He's always bragging about the latest little developer meetup they're doing, or advancement in some obscure software that has something to do with Ethereum Classic. And it's just, I don't know. I find it a little bit pathetic. I find it a little bit scammy. I wish he would just get back to focusing on the value of things and instead of trying to keep these bad ideas alive.
I mean, exactly. He's just trying to print money. I mean, that's what he's trying to do. He's trying to print money in the sense of buy up all as much Ethereum Classic as he can and then pump it to oblivion and then sell it. I mean, he has no other plans. I mean, obviously, clearly, he does not.
It's not a very good business plan,
Right. I mean, clearly, he doesn't want to keep it a store of value, right? I mean, he wants ICOs on Ethereum Classic. So, and then we got Garzik, who continues to push Segwit 2x, and then we have Eric Voorhees has been pretty disingenuous, I think, lately on Twitter, trying to talk all these good things about 1.5, and then at the same time say that he's going to stick with the 2x agreement until majority doesn't stick with it. But
Eric's got me blocked.
Yeah, and so I'm surprised Eric.
2x just feels so silly now that Bitcoin Cash is out. It's like, why do we want to do it? We just saw what happens. Like, why are we doing another one? Just use that one. Go away.
It's really weird, but like I said, I think a bunch of the bad actors like Roger kind of went with Bcash now. Garzik and Eric will probably go with 2x, and so
you probably covered it on a show without me, but maybe did you guys cover how BitPay was kind of subversively making everybody think they had to install their Segwit 2x version of their software to be able to be safe in the future?
Speaking of BitPay, of course, now BitPay is pushing Bitcoin Cash. Right?
Oh yeah. They added it to support to copay, right?
Yep. So now they're trying to support Bitcoin Cash. So I mean, if you just gotta follow the money, people.
Now it's a shitcoin wallet.
Yeah. So it's now in addition to Bitcoin, you can hold an altcoin. Sweet.
Vortex, I just want to jump in quickly right here.
Yeah, please go ahead, Frank.
So a few things I wanted to say. The first one is Jimmy already covered a little bit about that. He did a presentation. I was at Breaking Bitcoin in Paris. It was really great. I'll talk a little bit more about it later. But Jimmy did a presentation about how the negative externalities and benefits of forks are kind of distributed across from the different actors, and that really doesn't apply at all, in my opinion, to when there is no replay protection. So I'll tell you a little bit more about why I think that is. So think about the ethical responsibility of basically splitting or legal responsibility of splitting coins for someone else. That's only when you're a custodian exchange. I run a company which is exactly like BitPay, so I receive Bitcoins and I credit fiat on the other side. I have absolutely no custodial obligation whatsoever to act as a splitting tool for Bitcoin users. So if users send me Bitcoins and B2X, they will, because of the lack of replay protection, first of all, they won't know that I'm splitting and selling the B2X. You can't do blockchain analysis to trace that, because what I can do is, well, my official policy is that I don't even care. So I'm gonna just take your Bitcoins and they're gonna go in my pile and they're gonna move in my wallet and I'm gonna sell them at some ATM, and then the guy is the guy who split it. I didn't split it. You can't see that by doing chain analysis. So if you're not a custodial company that's receiving Bitcoins like BitPay or ShapeShift or stuff like that, you don't have any responsibility to act as a splitting tool and send it back. There's going to be a lot of accidents happening there. So that's one of my big issues with BitPay and ShapeShift pushing that, is that they don't have any skin in the game by making this decision. So regarding a little bit more about 2x, the core client. So the reason why there is an upgrade so quickly is it's not political. Is that I think is because there was something really interesting that happened at the conference. Is that JJ, the lead dev of Bitcoin, basically demonstrated an attack vector on Bitcoin nodes, which would basically create super large, super complex transactions and push them, and the nodes that have under 10 gig of memory would crash. So he did a live demo on stage of him crashing a node, and then he explained how he did the exploit. And obviously the exploit was not out. Well, it was. It had been already fixed by Peter Wulle by doing the per UTXO output thing. But it wasn't 0.15, but 15 itself was not out. So the fix was done, but it was not out. So obviously, with that knowledge in mind and the fact that yes, for him, it might not have been unreasonable because he gave 2 months in advance to Peter Woolley and all the wallet devs. And he said like, oh, making this attack would cost a lot of money and take a lot of time to create these big transactions. But there are some people in the network that have those transactions already like easy to construct, like quicker than we thought. So people were encouraged to quickly upgrade to 0.15, which fixes this bug. So at Breaking Bitcoin, obviously it was a great conference. You guys couldn't see the attendance. I think it was obviously a lot of photos, but let me just tell you that the level of attendance was insane. Like, thankfully there wasn't a bomb at that place because, you know, Bitcoin would have been wiped out.
It's true. Like every single intelligent person in Bitcoin almost was there. So that would have been scary.
Yeah, that was crazy. Obviously, I was running around, like you guys know me from the USF, you know, promotion. I was running around talking about 2x. There was only one person which was kind of on the fence. That person said later that they would rather not see 2x happen. That was Alex Petrov. There was not a single Bitcoin 2x supporter. The only Bitcoin Cash supporter was Deadlenix showed up at a party. So Deadlenix was like, there was one, you know, there was one Bcash supporter. A bunch of people had like no 2x stickers and people were sticking no 2x on themselves. It was great. So obviously the Bitcoin core team, a bunch of them were there, extremely approachable people. You know, everything. I think everybody, when they meet core people, they're super. Just a quick side note, I'm sidetracking a little bit, but when I was at Consensus in New York, I was with a bunch of investors from Montreal that don't know much about anything. And this happened to me on 2 different occasions at 2 different conferences, people saying like, oh, these are the smart guys. You know, when it was this Bitcoin scaling panel at those conferences, like they each have like one Bitcoin scaling panel and they're always like the smart guys. So when you meet Bitcoin core people, it really brings confidence in like the products that they're developing. So that was for that, for the 2x part. So 2x obviously will happen. Unfortunately, it will happen because I've been talking privately to some of the people on Twitter that are advocating for it, and at some point, you know, I've received like confirmation. They're just like, there's no more debating. Like like we're not gonna change our mind at this point. There's some of them can change their mind, like Bitfury and like Bitwalla and a few, but some others are like, they're just already too involved in it. They can't really go back. And what the best we can do is and the community's been doing it really well, is to give them an exit like strategy, like a face-saving exit. You know, there's this in history, you see examples of generals burning their fleet when they invade, you know, like you never want your opponent to not have an exit. So that's what the best we can do at this point, is to try to, you know, put up with what they say and get really people to understand that it's not too late. But some people will just like, the companies are, the train has left the station. Like it might take a few days for them to move back. The problem is that since the theory of forks has been developed, we know now that any tiny minority fork will have speculators pouring money onto it. So we're gonna have 2x coins, I'm pretty sure. Yeah, and like if I was gonna go long on the existence of 2x, I'm pretty bullish that 2x is gonna get some buyers, some people pushing it.
I think it's just you know, I've said it a few times now. It's just people want free money, and you're not gonna stop people from wanting free money. And so I have to say, I'm gonna work against 2x even happening. Like not even a single block for me. Like it's not one block for 2x, because if there's one block, then you know that chain happens and there's a so just to be clear, like just the fact that I'm bullish on 2x happening as just the odds, I'm really very much against that. Very hostile towards that effort, and I'm personally furious about all the work that I'm gonna have to do to split those coins, to deal with the customer support. I consider it personally to be a denial service attacks on Bitcoin businesses, because it utilizes their resources elsewhere, and because of the culture, not because of force, just because of expectations and the narrative. Businesses have to do some stuff, a lot of stuff that they weren't supposed to be doing, which is the reason why, you know, all the exchanges, you know, they're not putting efforts elsewhere, and that kind of stuff, right? And then right under our nose, China bans Bitcoin, you know. So that's the OS attack working well as intended. It's crazy because, like, you know, Garzik and Voorhees, they never mention this. They never mention the socialized costs that comes along with these freaking forks. I mean, all of these exchanges and all of these wallets, there's so much software. You know, it is early days, but there is a bunch of software right now and this is millions of dollars of development cost that will be socialized because of these forks. And you never ever hear Garzik talking about it. You never hear Voorhees talking about it, and that kind of upsets me a bit, because they're the way that they say things. They're just like, oh, okay, no problem. We're gonna have 2x. We agreed to it. We're gonna do it, and it's just completely not understanding the lay of the land, the ecosystem. Francis,
really quickly, I'll tell you why this happens is because they don't know they are the ones that benefit from barriers to entry because they're the biggest companies that have all the engineers and the core devs are working for them as consultants, right? What they don't see is that, for example, in Canada, there's like how many Bitcoins are on Kraken's order book? Like 90 in Canada. Like, have you looked at Quadriga's order book? It's like 150 Bitcoins. Like, where do you think all that trading happens? There's like 25 brokers like me that do like huge bulk of the work. Like, do you have any idea how hard it is for us and how trivial it is for them? They just hire like one super good dev that's gonna make them SegWit derive the address BIP44 script, and that splits the coins, and you have both blockchain explorers with a bot that's whatever. Super easy for them to do that, right? It's like a week's work, right? 2 weeks work, something like that. But for us, this is like shit. I need to raise VC money now because I need a cryptographic engineer at least on retainer. Right, and that's expensive. I need to dilute myself, give him equity if I don't raise a lot of money. So that's what they already have those people. That's why they don't care.
Yeah, and it's true. And I think that with all the crazy amounts of forks that's going to come out next year, I really think that 2018 is going to be the year of the Bitcoin fork. We're going to see, like we saw ICOs this year, we're going to see forks like that next year. And so, I really hope that smaller companies like yourself can figure out a way to be able to deal with this stuff, because it's only going to get more crazy, right? So I'm just hoping that somebody somewhere will program replay protection and get merged into 2x. Like, something always happens at the last minute. I try to tell people that things change fast in Bitcoin. Something always happens at the last minute that helps Bitcoin. So whatever it is, like, for example, like maybe, okay, the Chinese exchanges thing, well, that got leaked, right? Somebody leaked that information so that we can at least a little bit prepare. And I'm pretty sure that somebody is going to somehow get 2x protection in there. Like, I don't want to, go on record and say that that's going to absolutely happen. But I mean, come on, people. Do you really think that 2x is just going to get released?
It's still an open pull request, isn't it? Isn't there still an open thread to be able to add it?
I believe it's still open, yes. So that's what I'm saying. So I think somebody's going to write it, and then it'll get merged, and then again it'll be a non-event, just like with Bcash. Because remember, Bcash didn't have replay protection right away either. Okay, everybody likes to say, hey, Bcash had replay protection, so it was a friendly fork. No, dude, it did not have replay protection in the beginning. It took several iterations to get proper replay protection, and that took like a week. Like it took like days.
Very relevant to this line of conversation. We all remember when Bcash was first announced and they were actually going to do it for real, that there was this whole round of kind of announcements of different exchanges and various services kind of revealing to the world their position on the fork, what they plan to do about it, whether they plan to render the fork coins to their customers, and which customers they were going to render them to. Like Poloniex rendered them to the people borrowing the swaps. Bitfinex gave them to the people lending the swaps. One exchange said they were going to render the coins, another said they weren't, and then later said that they said they would. And then one example was BitMEX. BitMEX is they do the high leverage futures contracts thing. And I was having a conversation with him after Bitcash released, and it had been Bitcoin Cash had been holding steady above $300 for a little while, and I was saying to him, I know you guys said before the fork that you weren't going to acknowledge the fork, and this is a very great idealist way to look at the situation, and you're going to hold your word. You're just going to sit on those Bitcoin Cash coins forever, and they're going to rot. You warned everybody if they wanted them, they had to withdraw and split them themselves. But now we're in the situation after the fact. We can see the coins are there. We know there are people willing to buy them, and you're still going to sit on them. Now, you said you were going to do it, so yeah, you covered your ass, I guess. But in the end, why would you do that? Why would you just ignore this problem and let them sit? And I think what I would like to see is, I think this whole concept of that an exchange thinks it's going to be able to take a position on every fork is ridiculous. And I think that's what BitMEX was trying to say, was that we don't really want to go down this road. But the problem is that it will never be that simple. And what I'd like to see is the paradigm shift from exchanges figuring out how to provide a service where they will let their customers have their own private keys, where so I can say to the exchange, I would like to wipe my wallet, put my funds into a new one that you're a custodian of, and send me all private keys of the history of any of the Bitcoins you held for me from the past till now, since the last time I wiped it. And then this way, exchanges get removed from, in a large part, from the political side of the debate. And it would allow the customers to simply say, hey, if I want to be able to split this coin into any given fork, I just have to get a print from the last time of all my private keys that were holding coins. I can use external third-party tools or split them myself and remove the exchanges from having to decide whether or not to support a fork. The exchange shouldn't be deciding these kinds of things for customers. The exchange should only be deciding whether to list a new shitcoin. That's it. Whether they want to provide a market for a coin is a separate decision from whether or not they want to decide to even acknowledge that it should exist.
Yep. And one day, like I said, I mean, that's partly what I said. The exchanges are going to have to figure this out at some point because more forks are coming. And I really hope that would be one of the routes that they take, John, which is to allow the users to control their own private keys. I mean, but
obviously they can't control them during use, you know, until we see more advanced ways of implementing Lightning Network or something like that. But for now, and just in the basic form of theorizing about this, I do think it's not. I don't see the problem with trying to figure out a way to, allow a customer to get the private keys that represent the coins that are being held for them. They could even charge a fee. They could even say, we'll do a 1% export fee. So that
would be huge.
Just think of a way to provide a service and solve the problem rather than just ignore it and pretend it's going to go away.
That would be awesome if Francis could do that. Like, Francis, you offer the service to split the coins, but there's going to be a fee for that.
Yes.
Unless you pull out the coins yourself.
But you don't even want to split the coins. You just want to say, take the private keys and go away. I don't want to know what you're splitting them into, because someday there's going to be a potential environment where Bitcoin is getting split every week.
The fee won't be 1%, that's for sure, though. The fee is going to be much higher than that.
Yeah,
over half.
But I would rather have to pay 1%, 5%, 10% of my Bitcoin Cash coins to BitMEX than get none of them.
Yep. So very interesting stuff. Let's go with Gabriel. He's been waiting here for a while, very patiently. Thank you, Gabriel. We'll let you weigh in on the topic so far. What do you think?
Well, we've got two topics here. 0.15 release, which is huge, as has been pointed out, as well as the SegWit 2x hard fork. To address the software upgrade first, I just want to say, the fee estimation and a few other items, it's just amazing. I am a musician, as many people know. And a couple of years ago, I was telling Vortex about this at the time. Actually, it was about 1.5 years ago. I switched from Logic to Reaper. And Reaper is not a open source software, but it has kind of an open source ethos. It was founded by the Winamp guy, actually. And it's obvious to me that under the hood, it's really, really strong. It's really well organized because it's super fast. Their licensing is really open. It's not open source, but you can use it for free, and they're very cool. And they come out with these releases so often, it's insane. Like they leapfrog every other digital audio workstation, because I think it's because their code is just really tight, and so they can fix bugs and create new features really fast because everything's totally modular, and it's also extensible. So just like Bitcoin, where you can build on top of it, people can write their own scripts and plugins for Reaper. So it kind of reminds me of that, where there's these releases, and they've been happening pretty often with Bitcoin lately. There was kind of a bit of a gap in, I believe it was around 2013, and they've really sped back up, and now there's been a solid 3 to 4 releases a year. And I just want everybody to relish not only the wonderful community of genius coders at Core who find these incredible solutions and just do consistently awesome work for all of us and for the ecosystem and for the world. But also, as many people have pointed out, it's conceivable that in a few years, the reference client might have to slow down a bit because of existing infrastructure not being able to upgrade fast enough. We might reach a point where the reference implementation like nearly freezes, and we're not really able to roll out too many upgrades on the base protocol. And we're totally not there yet at all. We've got a lot of leeway here, and it's so amazing to see these incredible changes coming to the platform that just make the whole thing so much better and so much stronger, more censorship resistant, more usable, and there's a ton of usability increases coming down the pike over the next 5 years that we can all be really happy about. Regarding forks, so I want to just emphasize that hard forks are nuisance attacks, straight up. It's not possible to attack Bitcoin head on because it's decentralized. It's designed to get stronger from attacks. And so if you are, for example, a central banking cartel around the world who has, secret, power behind the scenes, who basically calls the shots for three-letter agencies in the US and KGB and whoever else. They've got, not only straight up militaries at their beck and call, but also these, spy type behaviors and hackers and everybody. Now, I would think that these three-letter agencies themselves might, like CIA, for example, would love Bitcoin because it allows them to have digital black money. But the banking cartel that funds them don't like it because they get all their power through there. So we've been seeing a real ramping up of the attacks on Bitcoin in the last 4 years. And in my opinion, the fork talks, the big blocking talks, those are all straight up attacks. Now, there may be a few people who were convinced by this totally circular logic and fallacious arguments coming out of those type of camps that aren't, straight up shills or bribed or coerced people. But in general, these are completely nuisance attacks. Just like a spam attack that we've also seen are as a type of nuisance attack. They can't do crippling attacks because it's too strong and it's too anti-fragile. They'll never stop. As far as we can tell, they'll never stop it. So they have to do these nuisance attacks, which are only delaying tactics. They don't impact the usability nearly enough. They don't impact the performance of the network. They don't impact the ecosystem enough to really have a long-term influence. However, well, long-term, yes, but only in the fact of kind of slightly slowing adoption and giving the impression of drama and conflict in Bitcoin that is not actually there. It's just a fucking attack. So I think that hard forks are a very effective nuisance attack. The more you do them, the less effective they will be. And so I agree that more forks are coming, but we're going to have fork fatigue where nobody will get bothered by them. Certainly even just one hard fork being pulled off and Bitcoin coming out with flying colors has already taken a huge amount of stress away from hard forks as a possible vector of attack. I think I do agree with Francis that we will see SegWit2x, but I think it's going to get even less adoption than Bcash has, and I agree that there's going to be more. But I think what's going to start happening is that start building in the replay protection and automated tools to deal with attacks. And so it's like, oh, there was another deal with forks, rather hard forks. Oh, there was another fork, just excuse me, just another plugin for this, and it's an hour of work or whatever for one developer to just chuck it out there. It's like DDoS, exactly like you said, DDoS. It's a very good analogy. It isn't a DDoS attack, but it's similar in the fact that it's a nuisance attack. Like you're not going to completely shut down the internet generally with DDoS, but you can act. And then, so what happens is decentralized and centralized alternatives pop up. And now we have Cloudflare and all these other things where we're limping along and it's fine. And there's long-term solutions like MadeSafe, which make DDoS attacks, because of their conceptual structure, totally impossible. So it's important to consider these hard forks nuisance attacks. There's no actual reason for them to exist. These two, I'm not saying that there might be one in the future where I think there's a good reason for it to exist. I don't think we're there. Opinion on it.
Yeah, I think we just don't really agree for the freaking need for 2x, you know. So I think it will have a smaller uptake than Bcash. It's hard to predict, of course, because again, there's going to be a shitload of speculators that's going to come in, and it's going to be a whole bunch of work for exchanges. We know they're going to have to support it because we saw what happened with Bcash. If you don't support it, you get a class action lawsuit. So you know, it's going to be really interesting to see. Pierre, I believe you had another comment or a final comment.
Yeah, so I agree with Gabriel in the sense that hard forks are going to have like diminishing marginal returns, essentially. Each additional one is going to be less than the previous. And I think the reason that is that we're observing a sociological process of people sorting themselves out into different camps within crypto broadly and then within Bitcoin. So as each camp gets its own altcoin that is specially designed for its cognitive, proclivities and biases, will have a very segmented situation. But at the end of the day, we have to look at what will be the camp for people who are looking for sound money and with a reliable payment system that is underpinning it, and that attracts the highest quality developers and the most, let's call them rational people. And I think that is the what we call now the Bitcoin Core consensus. And I think that when we think about from not so much inside baseball, thinking about what's going on inside the industry, when we think about monetary economics and what will be used in what I predict will be speculative attacks against fiat, it's going to be the crypto that has the most liquidity. And I don't see that changing anytime soon. I think the Bitcoin Core Consensus Network will continue to have the biggest fiat on and off ramps by far. The best the best runner-up right now is Ethereum, let's arguably say. The best they can do is kind of shadow Bitcoin, and like Bitcoin exchanges will add Ethereum like GDAX did, or these other exchanges do. I haven't seen an Ethereum only exchange appear that has much, a tremendous amount of liquidity and gives Bitcoin a run for its money, so to speak. So yeah, diminishing marginal returns. We get rid of a lot of people who, let's call them toxic, let's call them distractions. And I think that's bullish for Bitcoin.
Absolutely. Very well said. Very well said, Pierre, on that. Have to agree with everything on that. That was awesome. This is what we're seeing. This is, like I said, this is such early days, right? So we're having all these different political parties forming. We're having all these people, because in the beginning it was just Bitcoin, right? It was just everybody against the banks. Man, a part of me misses those days. It really does. Back when things were simple. And all we had to do was just take over the banks, and that was the only problem that we had to worry about. It was Bitcoin versus the world. Let's go get them. And now we're just in a bunch of different camps, a bunch of different parties. We got a bunch of different altcoins, and then we got all these people in Ethereum who just don't care about sound money at all. They're just like, hey, I want to make a dApp, and like I want to program and make $1 million on an ICO. So it's really a crazy time that we're living in right now with cryptocurrencies, and it's going to get a lot more hairier and a lot more crazy and a lot more difficult to navigate the field as more and more people start to come into the system. It's going to get bigger. The ecosystem is going to get bigger, but Bitcoin economics remain the same. They remain unchanged. 21 million coins, halving every 4 years, and the best team on the planet working on the protocol with the best track record, the best technology, and now we got satellites. So
I just want to say real quick that I'm actually a little surprised that some of these exchanges don't see the risk that they're taking with being so committed to doing something like SegWit 2x, and and the thing, like the behaviors like with BitPay kind of slipping in that people have to upgrade to this version that will be ultimately end up swapping these people to SegWit 2x. This is a very risky thing, and I actually think that if I were a shareholder in those businesses and I were savvy about Bitcoin, I would be concerned about their behavior. I don't think it's prudent the way they're being so confident and being so forceful with just saying, oh, we're going to do the 2x thing, we're all going to agree, and we're going to fly in the face of the whole community that's concerned and yelling at us and mad at us and telling us that we're trying to take over Bitcoin. We're going to do it anyway. I don't think they really are appreciating where the real value is coming from, who their customers are. It just doesn't really make that much sense. It feels wrong. It feels.
John, really quick comment, John.
Go ahead, Francis. Go ahead.
Yeah, sorry, because I spoke to an investor of one of such Bitcoin companies, an early investor in that company, which doesn't agree with the founder. And like many of these companies, the early investors are diluted, and the bigger VC firms have just written them off already. They've just written off the loss. In some cases, I'm just not saying which one or which ones, but there are cases where people just don't care anymore. And now it's just do or die,
It's just crazy. Oh, sorry,
but it doesn't change reality, though, because in the end, the real value, Bitcoin was designed to mitigate the middleman. It was designed to make them less of a factor. So anytime you're a Bitcoin business, Bitcoin is your biggest problem. So if this is the reality of it, they shouldn't be making things more difficult for themselves. They should be figuring out how to focus on providing services to their customers, making things easy for them, not focusing on making decisions for the political future of Bitcoin. This is very high risk stuff, and I'm actually really surprised that they're acting this ignorantly.
Yeah, and it's just really strange because it feels like in general to me that there's just way too many CEOs out there who do not contribute to Bitcoin Core whatsoever, do not pay anything, do not pay a dime, that continue to criticize Core, continue to criticize some of the smartest people in the world. They're like, a name, Eric Voorhees comes to mind if I want to, drop some names, but there's just so many people, right? There's so many people over the years, and it's just really strange, just to continue to call out these things where they contribute nothing to. And we hope that that'll. We hope that these groups can form so that they can make their own forks, they can go their own way, and because hey, to each their own, right? Obviously, Bitcoin Core is not the end all, be all of Bitcoin. Sure, they're the ones that are custodials of the client right now, the core client right now. But who knows? Maybe in the future, 10 years from now, somebody else will come over. I don't really think so because again, Bitcoin Core is the Mount Everest of programming. If the best, it attracts the best programmers in the world every day. I mean, this is a 24/7 thing, and so anybody getting out of college, all the young folks, and remember, a lot of the core devs now started out really young. I mean, Bitcoin's been around for 9 years now, and so actually there were a few of them that were pretty young. Even Peter Todd was pretty young, when he started working on Bitcoin. So this is really interesting stuff. Another name comes to mind, like Andrew DeSantis. I mean, that dude was 18 or something. I mean, he's it's crazy. These people that are working in this industry are just going. It just attracts the smartest people, and that's
Matt Corallo was in high school.
Yeah, Matt Corallo, perfect example. This is these are the people these core developers have dedicated their lives to this project because this is the most interesting thing out there. Not an ICO, right? Not another altcoin, Bitcoin. And so, I don't see that going away anytime soon. So great comments, guys. Does anybody else have anything on this topic before we move on to our final? Okay, great. Thanks so much, guys. We've been going about a little bit over an hour here, so thanks again so much for your time. We really appreciate it. Thank you guys for the viewers so much for joining us. We have one more topic left. We're now over 837 viewers, so thank you guys so much. We really appreciate all the likes and the subscribes. Everybody in the chat, we're having a great time. We had to kick a couple trolls, but hey, that's just par for the course in Bitcoin. You know how we do it. So let's see. Let's go to our final topic. This was pretty interesting because before I created the topic, there was only one article on it that was talking about it. So it really wasn't getting too much, people weren't talking about it. It wasn't getting too much attention. And so then Zero Hedge just put out an article on it today. And I'm like, wow. So that finally some more people are covering it. Now, of course, Zero Hedge being Zero Hedge was put the absolute most bleak and negative conclusions around it. But hey, I wanted to hear from the panelists to see what you guys think, because I think it could be on the road to something more positive. So let's talk about this. Google, Apple, and a couple other big companies, right, are adopting a crypto-compatible payments API. They're working together with the W3 consortium and to create this. I don't know if it's open source, but it's definitely going to be, W3C. So W3, everything's going to be out in the open. So I want to ask the panelists. We'll go with Pierre first. What do you think about this API being developed by these big corporations, and but being looked over and watched by W3C? Is this going to be a truly open source, truly open payment API that anybody can use, where we don't have to rely on, for example, BitPay's copay or something like that? We can just use like an open standard that the W3 is developing. So let me ask you, Pierre, is this what it is? Is this an open standard that they're developing? Is this good for Bitcoin and crypto in general? Or is this like Zero Hedge says, and it's just going to be another power grab by the corporations?
It does, W3C does publish open standards. So I think this is going to be open, and all of these browsers that are mentioned are open source. I think that this is an inevitability. Currently, Chrome saves my credit card information. Like, I don't really care as long as they don't charge it without me filling out some form. So if they can add, the number one concern for these web giants is to get people to spend their money, and anything that makes it easier for people to spend their money, it works in their favor. So I think that they're focused on improving the usability, improving the user experience of making payments online. And my understanding is that the crypto aspect of it is kind of a secondary side issue from the fiat side of it. So the HODL on disclaimer always applies of don't send Bitcoins to your browser if you want those Bitcoins to persist into the future under your control. In all likelihood, you will be separated from them, whether by hook or by crook, whether you do it, spending on Amazon or have it stolen by a hacker. Be very mindful before sending Bitcoins to your browser. So there's also the Brave browser, I think, that did not get mentioned. And the Brave browser is also building a wallet into itself, but that is focused on crypto. I know that they came out with a token, the basic attention token. That's when I stopped paying attention, so I don't have more to say about that.
Yeah, very interesting. It seems like to me that this can just be a simple wallet, like you said. Like Google already holds my credit card. Maybe this can just be that for that, the crypto version of that. Because obviously, I don't think people will want to put their entire cold storage in this wallet, right? We don't want to put our entire cold storage. But hey, why not put a couple $100 on there, and use it as your normal spending wallet, right? Like everybody has a freaking wallet that they have some damn cash in, or an account that they have a little bit of money in that they can use in addition to their main savings, right?
I do want to make the point that I see a lot of absolutism on Twitter and within Bitcoin about what wallet you should or should not be using. I think that you gotta map the wallets to a spectrum between the least secure imaginable, which I imagine would be a wallet that's in your web browser, to the most secure imaginable, when you think about different cold storage solutions. And then there's everything in between. And you have mobile browser or mobile wallets, like Green Address, and then you've got desktop wallets, my favorite being Bitcoin Core. And so all of these have security trade-offs. They have usability trade-offs. Users need to educate themselves. They need to learn what it means to hold your own keys, and how to not rely on third-party providers, where I wouldn't call those wallets. Like if you keep your Bitcoins on Coinbase, you've got Bitcoin receivables. You don't actually have Bitcoins per se. So That's the only things I have to add to that. And really, though, I will say, if having it in the browser means that you don't need to connect it to your Coinbase account when you're paying for something, like with PayPal, it's like, oh, you got to log into PayPal and then you send the money there. I think that does add some sovereignty to the web browser user experience. So I'm all for that.
Awesome. Yeah, I mean, that just seems logical to me, that you don't put all of your coins in this one wallet. Francis, we'll go with you next on this. What do you think about these companies coming together and creating this API?
Well, the only thing I know about is the Zero Hedge article, and I read I think one more article about it. So I don't know much about it, but the whole premise of the Zero Hedge article, I think, was kind of flawed because there was some, I don't know who the author was, but there seemed to be some misunderstanding of like how Bitcoin payments work and what those companies actually do. So I'll kind of speculate about like what they could be doing. So first of all, there's already an open payment standard on the web, and it's the Bitcoin transaction script, and it's the Bitcoin blockchain. So they don't need to come up with a new one. So I'm assuming if they're integrating Bitcoin, they're kind of going to be integrating the usability. And just a very quick comment on usability and security. A thing I learned and kind of really crystallized in my mind at Breaking Bitcoin is that usability is a security feature, because if it's not usable, people will use something else, or they'll like kind of hack around your obstacles, your security obstacles. So like if your product is un-user friendly, it is insecure from the point of view of the user, because the only thing that you can do is get the user to use your product, and you can't control people's behaviors beyond that. So sorry, what was the question again? Sorry, I got sidetracked in that.
No problem. I just wanted to ask you, like, what did you think about? I mean, is
all right,
is this a bad thing in the open, or is the open standards a good thing? Because remember, this does support additional crypto than just Bitcoin. The idea is to be a general open payments API, so to support everything and not just Bitcoin. Oh, you're still muted there. You're not muted with Google software though, so that's weird. Nope, can't hear you. Might have to go with another person then until you.
Yeah, I'll just pick up for a second.
Yeah, go ahead, John.
Yeah, as was mentioned earlier, I think it's a good point. This is inevitability. So I think it's a little bit silly for Zero Hedge to get, be going crazy and saying, the sky is falling just because there's going to be a web standard API for doing Bitcoin payments through the browser. I don't think many people, if anybody, has actually had a chance to read through the API documentation, see what they're actually trying to accomplish. I'm not even sure this has much to do with putting a wallet in the browser anyway. I think this might have more to do with integrating websites, being able to have payments be more user-friendly through the website into how you're transacting with them. It may even interface with your desktop wallet better, etc. So I think it's a little silly to get scared of an inevitable thing that's going to happen, and when you don't even know what it really does yet. I tried to show it to one of my developers really quick before the show, and his first response immediately was, just from the headline, cool. He wasn't scared, and he's a hardcore Bitcoiner. He sent me a link to like the goals of the API, and it just says things like, allow the user agent to act as an intermediary between merchants, enable user agents to streamline the user's payment experience, standardize the communication flow between a merchant, enable payment method providers to bring secure payment transactions. This is generally going to be good. We're not telling people to use this to store their Bitcoins. This is just another way to make Bitcoins easier to use. If you want to, it's like if you have an SPV wallet, or you want to keep copay on your cell phone to hold $100 worth of Bitcoin so you can spend when you're out. It's, you're not being a bad Bitcoiner, and just like you wouldn't be being a bad Bitcoiner to use your spending Bitcoin through an API.
Yeah, that's what I didn't mute myself. You guys probably heard me typing. Yeah, and I feel the same way. This is just a wallet, a way to make payments. You don't have to stick all of your money and all of your Bitcoin and all of your crypto on here. We'll see if Francis, if we can hear you yet. Nope, not yet. Okay, no problem. We'll go to Gabriel then, and we'll see if we can get Francis back after that. Gabriel, you're go ahead and tell us your comments on this crypto-compatible API from the W3C.
I got to admit, I didn't catch this at all. And I didn't see in the show notes that we were going to be covering this. So I was actually just doing a little research and looking into it. I think it's a little early to make judgments about it, but I think the truth is maybe somewhere in between. What John said is correct, where it's just kind of like They're trying to standardize some of the stuff that's already going on the internet and make it a little bit more usable, a little fewer steps, maybe a little bit more secure. However, also introduce new security vulnerabilities for users that we don't know about. So kind of a mixed bag, hard to say. It's something that could conceivably, like has been pointed out, be bolted on to crypto to make it a little bit more usable. But it's not really needed per se, since Bitcoin is so incredibly straightforward compared to using fiat with multiple intermediaries. I mean, payments on the web are insanely complex and horrible. It's the worst developer and business experience ever. I mean,
I can second that, Gabriel. I could definitely absolutely second that. I've worked with PayPal and everything.
Yeah, e-commerce is brutal. It is a horrible experience to get involved with. I mean, it's bad enough to be like a merchant and have to pay 3%, but most of the services that make it easy, such as like Stripe or whatever, they take very big fees for that service. If you want to do it yourself and like undercut other people, I've done projects like that, and it is so hard, so different in every jurisdiction, and it's just made for a world of 50 years ago, and they've just bolted on all these like custom centralized tech, and everybody's just taking money out of your pocket. It's just the worst middleman situation. So I think this payment stuff is just going to basically launch and then kind of maybe start to get taken up and then morph into something else that's like relatively crypto focused, because it doesn't change any of that back end like banking intermediary bullshit. So yeah, I'm not that excited about it. I think it's mostly kind of what you might consider a front end ish thing, where all the back end actual money movements is going to be exactly the same. It's just the connection between the user and the merchant that is affected by this.
Yep, and that does make sense, because there is, there's going to be a million cryptocurrencies out there, and so it does make sense to me, at least, to kind of try to attempt to have some type of open standard that you can choose to use any crypto with. Like you said, Gabriel, the Bitcoin API is pretty straightforward to work with, but we know, what if somebody wants to use half Bitcoin, right? So it's gonna get really crazy, and I'm for one, I'm glad to see some type of open payment standard being developed with cryptocurrencies in mind, just in general, because the W3 has created like a blockchain group, and this is, the word is getting out. So it's just great to see crypto. To me, this is a sign of crypto and Bitcoin maturing and growing up, because as you said, Gabriel, the payments APIs that we currently have, even Stripe, I mean, just everything that we have is just built on old, outdated systems built in the freaking 70s. We're trying to tack on here with some modern code, and it just ends up being a horrible system in general. Systemic fraud everywhere. I mean, you just can't go into any country that's not a first world pretty much because of this with credit cards, and so it's just really bad. But does anybody else have anything to mention on this topic? Okay, cool. So thanks, guys, so much for joining. I really, really appreciate everybody coming on. Francis, unfortunately, we lost your audio there. We really want to hear what you wanted to say, but we will have you back on again. All you guys, I love having you guys on. So Pierre, Francis, John, I'm definitely going to have you guys on again. Gabriel, not so much. No, just kidding. Just kidding. You guys have been great, and I really appreciate your time. We're going on an hour and a half here, so I think it's a good time to end it. I don't want to create a 3-hour show or anything like that. So we had over 850 live viewers at the peak of the show. Really appreciate you guys' time. We hope that you enjoy it. We had a lot to talk about, and we're going to have a lot to talk about next week as well. We're doing the show now every Sunday at 12 p.m. Pacific. So we used to be only every other week. Now we're doing it every week. We're trying to bring you guys more content. So we really appreciate all the likes, all the subscribes, and all the donations. We're really trying to expand the World Crypto Network and make it even bigger. We got some big things in the works. So without further ado, let's go ahead and outro everybody out here and tell everybody where we can find you. So Francis, I know your audio is not working, so I just want to remind everybody that links to his Twitter account and company is going to be in the show. So definitely, guys, check that out. Sorry, Francis, I still can't pronounce your company very well, but Cadillac but I'll get it. I'll get it. So thanks so much, Francis. We really appreciate it. Gabriel, tell the world, please, where we can find you.
I believe it's pronounced Catalaxis. But no, that's wrong. That was wrong. That was wrong.
Man.
Okay.
Catalaxia.
Catalaxia.
And it's catalaxia.com. Yep.
Excellent. I can be found most easily on Twitter at Gabriel Divine, and I hope to see you there. You know, Vortex, you inspired me, Thomas. Hey, man, welcome.
Thomas,
I made it in time. You were trying to close out, but I made it. Sorry to interrupt.
No problem.
Vortex inspired me today. He opened up his DMs on Twitter, which is a brave move. But you inspired me, so maybe I'll meet some incredible person or something that way, or somebody maybe will send me some awesome chord progression or something. And so yeah, I'm going to try it too, and then let's compare notes later. Okay, find me on Twitter at Gabriel Divine.
Awesome. Yeah, I did definitely open up my DMs today. I just feel like it's time. The community is getting bigger, and there's more and more questions, and so I just feel like it is time. Obviously, I'm pretty anonymous, semi-anonymous. I do the show and everything like that, but I'm just I'm here trying to help expand the Bitcoin community and trying to bring the truth. And so that's really what my focus is. And if people can get a hold of me easier and ask me questions, or even give me tips, that I can help and share with the community, then that would make it all worth it. So and also I want to mention that Francis too has his DMs open, so definitely drop him a line if you guys have any questions for him. Again, I will have his Twitter account and link in the show notes after the show. So then, John, please tell us where we can find you.
Sure. Yeah, on Twitter, you can find me as Bitcoin Erlog. You can find our project at exotica.tv. I plan to show up on the show a little more often, and also start doing a little bit of my own content. Hopefully have all of you guys visit me at some point. Check out our website, check out my Twitter, and I'll see you guys soon. Thanks for watching.
Awesome, John. Thanks so much for joining, man. We really appreciate your info. And Pierre, oh man, what a great show, man. You put forth so much good information in your blogs on Nakamoto Institute. So much good information here. I mean, on the daily, you drop knowledge on Twitter, so everybody needs to follow you for sure on there. But just thanks so much, Pierre, for joining us. Just tell us where we can find you, even though we all know.
Yeah, thanks, Vortex. I'm at Pierre_Rochard. If you need the spelling on that, go look in the YouTube show notes. And you can also find what I wrote. Go to Nakamoto Institute. Don't just read what I wrote. Read everything there. A lot of fantastic information put together by my collaborators, Michael Goldstein and Daniel Krawitz. So follow them on Twitter too. And yeah, thanks for having me on. Everyone, thanks for listening.
Awesome, Pierre. Yeah, definitely, guys. You need to read everything on the Nakamoto Institute for sure. And the link, of course, is in the show notes. And I think everybody will agree that it's got some life-changing content on there. It really does. Really makes you question how the hell the world works. And so that's why I've been loving it. And looks like we got Thomas, Mr. Mad Bitcoins himself, #MadTour, jumping in on the show to say hello, Thomas. What's going on, man?
Thanks so much. I just got to Amsterdam. It's the middle of the night here. It's around 10:30. And I looked at my phone. I was just logging into the Wi-Fi here, which is blazing fast. It was like 30 up and 40 down. No problems at all anymore now that I'm in Amsterdam. And I saw this show was on. It must be the middle of the day in the Las Vegas. And I just wanted to say hi and tell everyone I made it to Amsterdam. I have some friends here that used to live in Sacramento. So I'll be well cared for, as well as I came here on the train with Bass and Tay and Ty, and I want to say hi to them and thank them for hanging out with me on the bus. We took a bus from Essen, and now I'm in Amsterdam, and I'm going to stay in Amsterdam for a little while, I think. So
awesome, man. Awesome, Thomas. Well, thanks for joining. Thanks for coming in to let the show, to crash the show, Thomas. Thanks for coming in to end it. We really appreciate it.
Everyone should give us a thumbs up and a share and subscribe down below if you haven't.
Absolutely. You can catch Thomas every single day on the Today in Bitcoin show. And of course, we do the weekly the Bitcoin group on Fridays. So definitely check that out, guys. We're bringing you tons of content. We hope you enjoy it, and really appreciate all the viewers. We're going to have, there's so much to come, people, so much to come. The Bitcoin world never ends. The drama never ends. So until next time, guys, please keep on talking Bitcoin, and we'll see you later. See you guys.
Keep talking Bitcoin.